King from Westpac, thank you for joining us. This morning in your results you describe this result as the most difficult result Westpac has seen in many years. What made it so tough?
Well, thanks, Ed. In terms of the result today, it's really a number of factors. So we've got some industry factors such as lower interest rates. We've obviously got COVID-19, which has had a big impact on this result with a large increase in impairment charges. And then we've got some of Westpac's own compliance issues that have affected this result as well. So those three factors have had a large impact on the result. So we reported a profit of $1.2 billion this half, which was down 2/3 on the prior half.
Look, we know the coronavirus is affecting all businesses across the country. Looking at Westpac's headline numbers, are there any business units that are worth calling out as doing particularly well during this difficult time?
Yeah, I think we were very happy with margin management in the majority of our businesses. Particularly the consumer bank did well at managing margins. The context behind that was lower interest rates, a little bit less demand on lending, but I was very happy with how we managed margins. The other business that did very well was our treasury business. So it was managed well for the lower rates and produced a very good result in half.
Given the state of the economy at the moment, was it an easy decision to defer the dividend?
Well, the context behind the dividend was it's a decision we make every 6 months. There was some pretty strong guidance from the banking regulator, APRA, that their prudent course of action was to defer the decision on dividends. And I think there's other banks. I think we're now the third bank to defer the decision. But we very much understand that that will impact shareholders, particularly retail shareholders. So it wasn't an easy decision for us to do that. We will consider options over the course of the half. We'll be looking at how the economy goes, how the credit portfolio within Westpac goes, and considering the interim dividend during the half.
Yeah, what are the chances of this dividend getting paid?
Well, I think it'll come back to what the economy is doing. So our base forecast is for unemployment to reach 9% in the June quarter and reduce to 7% by the end of the year. That's probably one of the key metrics that we'll be looking at. Our economists think that unemployment could have peaked at 17% had it not been for the government stimulus, including the JobKeeper. So the JobKeeper initiative by the government has been very important in that outlook. We'll also be looking at customers asking for help, the packages, the deferral of loan repayments, how that's going, what we're seeing. They'll all be important factors. It'll be something we're ongoing monitoring, so there's not really a time frame I can put on it.
One of the big provisions in your result today is AUSTRAC. Can you update us on the mediation process there?
Yeah, so today we've recognised $1.1 billion in charges for AUSTRAC. The largest component relates to an allowance for penalties. So that's what we've recognised. In relation to the mediation, it is ongoing. It's not something I can talk about given it's private and confidential, but we'll see what we can do.
Today you also announced a strategic review into your superannuation insurance businesses, among others. Can you just talk us through this review and the reason why it's been announced and what the new Westpac might look like?
Yeah, so as CEO, one of the first tasks is to look at the portfolio, look at the businesses that we would like to invest in the future, and what we've decided is that banking is our priority from an investment perspective. Now, investment's not unlimited, so that we've had to make choices, and what we've said today is that for insurance and platforms, auto finance and superannuation, that they're businesses that we're going to undertake a strategic review. We're pleased that Jason Yetton's joining us to lead those businesses. Jason's worked at Westpac before. He has experience in banking and wealth, so he's a great person to be leading that. And we'll provide further updates on the review as we go through the second half.
Is there a good chance that that business will get spun off?
We'll look at all options in that strategic review. What we've announced today is the direction we're going in. It gives clarity to the organisation on the priorities, and we'll work through options as we go through. So it is a true strategic review.
In your results this morning, you also talk about house prices across the country falling this year, particularly Sydney and Melbourne. What impact do you think that might have on mortgage delinquencies at Westpac?
Well, in fact, mortgage delinquencies, the first thing is, do people have jobs? So unemployment is the measure that we'll look at the most. That often drives delinquencies. If people have jobs, they can service their loans. And so that'll be the primary piece, and that's where I think the JobKeeper package from the government will be very important, but also the other stimulus measures. So some of our estimates indicate over $300 billion of spending and stimulus by the government. That combined with what the Reserve Bank's done on liquidity, lower interest rates, and I think the banks in delaying loan repayments gives a very good a chance for everyone to get through this period and businesses to go back into business and employees to go back to work. And so that's the right course of action at the moment.
There's been a lot of talk about what the recovery might look like. Is it going to be a U-shape? Is it going to be a V-shape? What's Westpac's predictions there?
Yeah, so our base case is more a V-shape. And that comes back to we've had a sharp contraction activity in the quarter as we've implemented social distancing to manage the health crisis. Once that starts to relax, then that means activity comes back, but also the stimulus from the federal government in particular and the state governments is helping business survive through this period. So that's why we think a V-shape rather than another shape.
Branch activity, what's that been like over the last 6 weeks during the coronavirus sort of lockdown?
Well, we have seen lower branch activity, and that's not a surprise. If a small business is closed, they're not coming in with their cash and their deposits taking, so there's definitely less of that. We've got less people coming into the branches to do business, more people using online channels, less cash in ATMs and whatnot. So it'd be interesting to see when we go back to a more normal situation some point in the future whether that lasts or not. But certainly I think a lot of customers are using digital and will probably have less cash usage.
Peter King, thank you for joining us.
Thank you, Ed.